OECD inflation rises to 4.2% in June. Egypt and Vietnam forge comprehensive strategic partnership. And Russia calls the US tariff threats against India illegal trade pressure. You're watching Q News, and this is the Economic Bulletin with me, Henny Saif, and we'll start off with the Organization for Economic Cooperation and Development, where it has reported that year-on-year inflation in its area increased to 4.2% in June, up from 4% in May. This rise, measured by the Consumer Price Index, was noted in 21 of the 38 member countries. Energy inflation turned positive after 2 months of declines, while food and core inflation held steady. In the G7, inflation also rose to 2.6% in June, mainly due to a slower decline in energy prices. The euro area saw inflation remain broadly stable at 2% in June, and according to a flash estimate in July as well. Meanwhile, G20 inflation held stable at 3.9% in June, with Argentina's rate continuing to fall to 39.4%. Dealogic data has revealed that global mergers and acquisitions surged to $2.6 trillion in the first 7 months of the year. This represents the highest level since the peak of the 2021 pandemic era. It noted that a robust quest for growth in corporate boardrooms and a surge in artificial intelligence activity are the main drivers behind the significant increase. Dealogic added that the number of transactions to August 1st is 16% lower than the same time last year, but their value is 28% higher, boosted by US megadeals valued at more than $10 billion. In Asia, Statistics Korea has reported that South Korea's consumer prices rose by a seasonally adjusted 0.2% in July compared to the previous month. This monthly increase follows a flat reading in June and aligns with market expectations. On a yearly basis, consumer prices increased by 2.1% in July, a slight slowdown from the 2.2% rise in June, and also matched forecasts. Core CPI, which excludes the volatile costs of food and energy, saw a monthly increase of 0.3% and a yearly increase of 2%. This marks the third consecutive month that core inflation has held steady at 2% year on year. Moreover, South Korea's finance ministry has announced preparing measures to help companies cope with higher US tariffs and expand into new markets, as it kicked off a task force to prepare the new administration's economic policy plans. The government noted that it will come up with measures to boost short-term demand, as well as financial support for mid- to long-term technology development to enhance market competitiveness. Statistics Indonesia Bureau has shown the second quarter growth was better than expected, driven by robust investment and household spending, the fastest pace since the second quarter of 2023. It noted that gross domestic product accelerated to 5.12% from 4.87% in the previous quarter. Household spending, which makes up over half of Indonesia's GDP, accelerated slightly to 4.97% year-on-year in the second quarter, while investment growth surged to a 4-year high of 6.99%. Statistics Indonesia also noted that on a non-seasonally adjusted quarter-on-quarter basis, GDP expanded 4.04% in April to June. And moving on to North America, Canada's merchandise trade deficit widened to 5.9 billion Canadian dollars in June, marking the second highest deficit on record. Data from Statistics Canada revealed that imports grew faster than exports, primarily due to a large one-time import of oil equipment. The deficit highlights the impact of ongoing trade disputes, with U.S. tariffs on Canadian goods increasing to 35% on non-compliant products, as well as on steel, aluminium, and automobiles. While exports to the U.S. saw a modest increase in June, driven by higher crude oil prices, they were still down 12.5% on a year-over-year basis. The Commerce Department has reported that the U.S. trade deficit shrank in June, primarily due to a sharp drop in imported consumer goods. This is seen as the latest effect of President Trump's tariffs on global trade. The overall trade gap narrowed 16% in June to $60.2 billion. Additionally, the trade gap with China shrank to its lowest in more than 21 years. Exports of goods and services totaled $277.3 billion, down from more than $278 billion in May, while total imports were $337.5 billion, down from $350.3 billion. The U.S. services sector unexpectedly stalled in July, with the Institute for Supply Management's Purchasing Managers Index slipping to 50.1. This reading, just barely above the expansion threshold, was well below economists' forecasts and points to a significant slowdown in a sector that makes up more than two-thirds of the economy. The report attributes the stagnation to uncertainty surrounding the Trump administration's tariff policies. Employment in the sector weakened, and new orders saw a decline. Meanwhile, input costs for businesses rose at their fastest pace in nearly 3 years. President Donald Trump announced new tariff plans on Tuesday, targeting both pharmaceuticals and semiconductors. He stated that a small tariff on imported pharmaceuticals will increase to 150% within 18 months and eventually to 250% to boost domestic production. Trump also said he would announce tariffs on semiconductors and chips in the next week or so. The pharmaceutical industry has been preparing for these tariffs, which follow a national security review of the sector.
A lot of countries from war, India and Pakistan, we stopped a lot of countries, and we're going to get that one stopped too. Somehow we're going to get that one stopped. That's a really
Goldman Sachs has revised its forecast for the U.S. Federal Reserve, now predicting a potential interest rate cut in September 2025. This is 3 months earlier than its previous estimate and is driven by signs of a weakening labor market and cooling inflation. The bank now forecasts 3 consecutive 25 basis point cuts this year in September, October, and December. Goldman Sachs also noted that if economic conditions worsen, a more aggressive 50 basis point cut in September is possible. The Swiss government has announced that President Karin Keller-Sutter and Business Minister Guy Parmelin are traveling to Washington, D.C. to address the 39% tariffs recently imposed by U.S. President Donald Trump on Swiss exports. The pair will hold talks with U.S. authorities to try and improve the tariff situation for Switzerland before the tariffs take effect on August 7th. While the government did not specify what new incentives it might offer, it did state that it is not considering any retaliatory countermeasures against the U.S.
Non, moi, franchement, c'était une décision. Il y a eu d'autres moments.
Egypt and Vietnam have upgraded their relationship to a comprehensive strategic partnership focusing on economic and trade cooperation. The announcement came during a visit by the Vietnamese president to Cairo, where he met with the Egyptian President Abdel Fattah el-Sisi. The two leaders agreed to work towards increasing bilateral trade to $1 billion and expanding cooperation in sectors like agriculture, manufacturing and IT. They also signed two memorandums of understanding on economic and local development. The agreement positions Egypt as a gateway for Vietnam to the Middle East and Africa, with Vietnam providing similar access for Egypt to Southeast Asian markets. The Central Bank of Egypt has reported that the net international reserves rose to $49.036 billion at the end of July 2025. This marks an increase of $336 million from the $48.7 billion recorded at the end of June. The central bank attributes this growth to improved revenues from tourism, exports and a surge in remittances from Egyptians abroad, which hit a historic high of $3.4 billion in May. Egypt's foreign reserves include the country's gold reserves, revenues from the Suez Canal, export earnings, and remittances from Egyptians working abroad. Saudi Arabian oil company Aramco has reported a 22% drop in the second quarter profit, mainly on lower revenue, while it racked up more debt. Aramco reported its 10th decline in quarterly net profit to $22.7 billion in the quarter through June, from $29.1 billion a year earlier. The company highlighted that it was cutting costs and looking to divest assets as crude prices drop and its debt mounts. It added that total borrowing rose to $92.9 billion at June 30th from $74.4 a year earlier. And 5.3% the previous quarter. Russia has accused the United States of exerting illegal trade pressure on India after U.S. President Donald Trump threatened again to raise tariffs on India over its purchases of Russian oil. Kremlin spokesman Dmitry Peskov noted that the statements are in fact threats and attempts to force countries to cut trade relations with Russia. Peskov added that Russia does not consider such statements to be legal and highlighted that sovereign countries have the right to choose their own trading partners. Additionally, he noted that countries should choose for themselves the forms of trade and economic cooperation that are in the interests of a particular country. The Ministry of Finance has revealed that Russia's oil and gas revenues in July fell by 27% year-on-year to 787.3 billion rubles. For the first 7 months of the year, oil and gas revenues were down 18.5%. Despite the overall decline, the ministry noted that mineral extraction tax and gas export duties more than tripled in July compared to the same month last year. India has called President Trump's new tariff threats unjustified and unreasonable. Trump announced that he would substantially raise tariffs on Indian goods, accusing India of buying large amounts of Russian oil and reselling it for a profit. This comes on top of a 25% tariff on Indian imports, which takes effect on August 7th. India's Ministry of External Affairs stated that its oil imports are necessary to provide predictable and affordable energy costs for its citizens. The ministry also pointed out that what it called double standards, noting that the US and the EU also continue to import various goods from Russia. And for further analysis, we're joined from Barcelona by the former World Bank advisor and director of EU ASEAN Centre, Mr. Meher Nicholas Fursley. Mr. Fursley, welcome to the Q News Economic Bulletin. How does the Indian government now respond to President Trump's claims that India's continued purchase of Russian oil helps finance the war in Ukraine and that this practice warrants higher US tariffs on Indian goods?
I'm delighted to join you today from Catalonia. It's quite puzzling. It's quite puzzling. I mean, as you know, I often quote unquote explains, or I often, try to justify some of the things which President Trump does, which seem very smart to me, regardless of politics and left or right considerations. I think that often Trump is unjustly accused by the Europeans or the Americans or the Arabs or whatever. So I very often try to present his point of view and the rationale behind his behavior. However, today I will not do that because I think his current stance on India and Indo-Russian relations is really stupid. I think it's a mistake, and for short, I think it will backfire. So I think what he's doing today regarding Indo-Russian interfering essentially, because Russia is a sovereign nation, India is also a sovereign nation, but there are not any countries, with all due respect, for France or Mexico or whatever, or Tunisia, Russia and India are pivot nations in the new great game, which President Trump himself is playing quite well against China, that great Chinese-American techno-industrial rivalry, which is the new great game, right? The world only has two gigantic superpowers now, and we all learned 9 days ago during the Aberdeen summit, where Ursula von der Leyen submitted to the White House. We all learned 9 days ago, even the skeptics, that now the European Union, which fancied itself as a superpower, is not a superpower. So there are only two superpowers left standing, China and America. And in that new great game, there are important strategic pivot nations. Only five or six pivot nations. Egypt, of course, is one of them. And India and Russia are also very important pivot nations. So now Trump is interfering in the commercial relationship between two foreign nations and is trying to impose on them American law. So it's fairly easy to impose American law on Tunisian or French or Peruvian or Belgian governments. It's much more difficult, as Trump will soon learn, to do it when it comes to India and Russia. There's a big mistake which many people make about Indo-Russian relations in Europe and America. Why do they make the mistake? For a simple reason, because when the Cold War ended in 1990, 1991, Soviet Russia collapsed. And you had in Central Europe and Eastern Europe and Latin America many socialist or communist client states which were aligned with the Soviet Russian regime. One of the last which fell a year ago is the Assad regime in Damascus, or the Gaddafi regime in Libya, etc., Cuba, etc. So, because the European...
Well, Mr. Fairzli, India has stated that its oil deals with Russia are driven by market realities, not political alignment. So how do you think they can India can reconcile the global expectations on Ukraine with its own energy security and national interests?
Absolutely. So there is a legal, commercial, and financial economic dimension. It's true. And the Europeans and the Americans have no authority. They have no legal base to impose their laws on other people. The third parties. Russia is a third party. India is a third party. They are grown-ups. They can do whatever they want. They can trade in rupee, in ruble, in dollar, in whatever, and no one can come between them and interfere. But it's much more than just material, industrial, financial interests. There's a streak which runs deeper. And what I'm coming at, and the big mistake they still make today in Europe and Washington, because all these socialist, communist, pro-Russian regimes in Czechoslovakia, Hungary, Poland, they fell quickly in 1990-91. There is the belief in Washington and Brussels that it's the same with India, that in the Cold War, for Cold War era reasons, India was very close to Russia, just like Assad's Syria, or Gaddafi's Libya, or whatever, or Poland in the 80s. But now things will change, and India will abandon Russia if only we pressure India. That is very stupid and very silly, because beyond financial interest and economic interest, beyond the Cold War, there's a streak. There's an ethnic cultural relation which goes back thousands of years, connecting Russia to northern India. So the northern Indians, the Russians, ethnically, culturally, they have very strong ties, and that's a very deep streak. And there is a feeling amongst the ruling party, the BJP, the Bharat Janata Party, led by President Modi. There is a feeling that what Trump is doing is unfair, that they are being stabbed in the back by the White House, and they are now getting the Indian elites, the Indian economic, financial, and political elite, are becoming very angry. And it would be a big mistake from the part of the White House if they think they can deal with India the way they deal with Canada or France or Guatemala. India is not like that. India is really a very important pivot nation, and it will not let anyone interfere in its national interests.
Well, Russia responded. I mean, the Kremlin has described the U.S. pressure as illegitimate and a violation of national sovereignty, and said that any sovereign country has the right to choose and pick which other country to trade with and the nature of the trade relations and cooperation. So how does Russia now interpret Trump's rhetoric as it relates to the strategic partnerships with countries like India?
Well, not only is it regrettable, it is illegal, because Russia and India are totally sovereign nations. They're not colonies, right? And because they're not colonies, they cannot be bossed around and given orders by some bureaucrat in Brussels or Paris or Washington. It doesn't work that way, right? So according to international law, if you are an independent state, you have sovereignty, and you can do business with whoever you want. And a third party, in that case America is a third party, cannot interfere in the commercial, economic relations of the others, right? What I want to say is the following, back to what I said earlier. We have to stay focused on the big game. What is the big game? It is the Chinese-American rivalry. It is the rivalry between the eagle in Washington and the dragon in Beijing for the control of the world. This is the era we live in today, right? And it would be crazy. It would be very bad for America if they keep on behaving that way, because they would push India and Russia into the arms of China. So it would be very foolish, and it goes against the national interest. So what I'm coming at, it goes against the national interest of America itself.
Yes, well, Mr. Fursley, one final question. Now, practically, what are then the potential economic consequences for India if it is compelled to reduce or cease imports of discounted Russian oil due to the US tariff threats, including the estimated impact on India's oil import bill, inflation, and refining industry profitability?
I think it will not happen. So I think India will not be compelled. Now, what happened in the past 6 weeks, Trump has been on a fabulous winning streak. It was a beautiful, to use Trump's own terms, it was a big, beautiful winning streak, because starting with the trade deal he got in the bag 7 weeks ago with Britain, with England, he has got now trade deals which are very advantageous to America, which he forced upon the European Union, France, Germany, Indonesia, Vietnam, Singapore, etc., etc. So really 6 weeks of uninterrupted winning deals, winning trade deals, and Trump was able to force his will to the world. That is great for America. But he would be naive to think he can do with India and Russia what he did with Ursula von der Leyen or Vietnam or Peru or Guatemala.
Yes. From Barcelona, that was the former World Bank advisor of the European Union ASEAN Centre, Mr. Meher Nicholas Fursley. Mr. Fursley, thank you very much for joining us on our Economic Bulletin. Ladies and gentlemen, now we move on to the latest developments from the energy sector. OPEC Plus has agreed to raise its oil production by 547,000 barrels per day for September in an effort to regain market share. The decision made by 8 key members marks the full reversal of the group's largest round of output cuts. The move comes amid steady oil prices and concerns over potential supply disruptions from Russia. OPEC Plus said the decision was based on a healthy global economy and low oil inventories. Goldman Sachs has reiterated its oil price forecast, with Brent crude averaging $64 a barrel in late 2025 and $56 in 2026, but noted that a wider range of risks could affect its outlook. The investment bank identified upside risks from increasing pressure on sanctioned Russian and Iranian oil supplies. However, it also highlighted downside risks to oil demand due to weak U.S. economic data, which increases the chance of a recession and the impact of U.S. tariffs. The forecast comes as OPEC Plus agreed to increase oil production by 547,000 barrels per day in September. Goldman expects the group to keep output unchanged after that, as global commercial stocks accelerate and seasonal demand fades. Oil slipped over 1% on Tuesday as rising OPEC Plus supply and worries of weaker global demand countered concern about U.S. President Donald Trump's threats to India over its Russian oil purchases. Brent crude futures were down 1.2% to $67.94 a barrel, while U.S. West Texas Intermediate crude slipped 1.3% to to $65.41. Both contracts fell by more than 1% on Monday to settle at their lowest in a week. Global markets presented a mixed picture, with Asian stocks closing higher while U.S. futures and European indices showed varied performance. In Asia, a positive trend was evident as the Shanghai Composite rose 0.96%. The Hang Seng Index gained 0.68% and the Nikkei 225 jumped 0.64%. Conversely, the U.S. futures pointed to a soft opening, with the S&P 500 futures declining 0.49%, Nasdaq futures going down 0.51%, and the Dow Jones Industrial Average futures losing 0.28%. European markets were also mixed, with Germany's DAX advancing 0.33%, while the UK's FTSE 100 was nearly flat and France's CAC 40 dipping 0.21%. That brings us to the end of our economic bulletin, but here's a reminder of today's main stories. The OECD inflation rises to 4.2% in June. Egypt and Vietnam forge a comprehensive strategic partnership. And Russia calls the U.S. tariff threats against India illegal trade pressure. These are all the economic and financial news we have for now, but please don't forget to follow Q News on YouTube, Facebook, X, Instagram and TikTok at QNews EGY to stay informed. Thank you for watching and stay tuned for more updates coming up here on Q News.